Hello, everybody. It's a beautiful April day today. It's also 10 o'clock and time to get this event started. Welcome to Nordnet, all of you, and our presentation of the report for the first quarter of 2021. My name is Johan Tidestad. I'm the Chief Communications Officer at Nordnet, and I will be hosting this session today. Lars-Åke Norling, our CEO, and Lennart Krän, our CFO, will make a presentation of our business and our financial numbers for Q1. That will take something around 20 minutes, and after that we'll have a Q&A session. And during the presentation itself, all participants will be muted, so we simply let Lars-Åke and Lennart go through their slides first. And when we come to the Q&A session, you click on the button at the bottom of the screen that says raise hand, and then I will enable you to talk and ask your question verbally. We'll come back to that later. And of course, the presentation itself will be available on our corporate website, together with a recording of this session. And speaking about our corporate site, that is, as you might know, available at nordnetab.com. That is also where you find all the information about Nordnet as a company. Among other things, we have all our financial reports available in Swedish and in English. Okay then, let's do this. Lars-Åke, please go ahead.
Thank you, Johan. So we can move to the first page, Sunny. Starting with some highlights. Record inflow of new customers. We've grown now the customer base with 39% in 1 year, and we currently have 1.4 million customers on our platform. Savings capital also all-time high, 648 billion SEK, and we see a good increase here, both from strong net savings, but also from market appreciation. Also very high trading activity in the quarter, and quarter with the highest trades ever, and a large share also of cross-border trading. We also launched a Norwegian pension account, EPK product, and I'm going to cover that in more detail later. We also implemented digital process for signing and transferring occupational pension in Sweden. As you all know, it's a cap on the transfer fee from April 1. And we will, of course, want to attract customers to our platform in a digital way. From very strong revenues and good cost control, we also see a record financial result. And we have a net profit of 813 million SEK in the quarter. We can go to the next. So some highlights of a very strong quarter. Like I said, customer base has been growing 39% in 1 year. Also very good growth then in the savings capital. We almost double that, again, from market appreciation and net savings. Also very strong trading activity, 61% up versus last year. With the strong customer inflow, also increase in savings capital, not least the trading activity, that's also allowed for a very strong increase in revenues of 73%. At the same time, we see a slight increase in cost versus quarter one last year. If you compare to quarter four last year, we were basically a little bit down actually in cost. But we see an increase in cost pressure in customer service and also in back office from the great momentum we have now in the customer growth. But overall, good revenue increase coupled with good operating leverage has also allowed for then the record profit of 830 million SEK in the quarter. Go to next. This is just a little bit comparison versus quarter four also. We see a strong development there as well, with the 45% increase in revenues, slightly down on cost, and also a considerable increase in profit before tax in the quarter. Go to next. We see a very strong long-term growth, both in customers and savings capital. There's a few reasons for this. One is, of course, the big improvement we've done in our platform, which has allowed for a far better customer experience. Then we also see a very strong digitization trend in the Nordics overall, and overall also a large interest in savings and investments. But also a little bit unique for Nordnet, we see that we reached critical mass and a tipping point when it comes to growth in the customers outside of Sweden. We almost, what we say, have hyper growth in especially Denmark and Norway. Go to next. This is just a summary of the customer growth per month versus last year, and also net savings versus last year. And if you summarize a quarter, then we brought in almost 170,000 new customers compared to 89,000 last year for the same period, and that was a strong quarter. So overall, a very strong growth quarter for customers. And net savings, we are slightly ahead of last year, which had a very high net savings from also the Corona crisis at that time. We go to next. And we continue to leverage on our Nordic position, and we have a well-diversified revenue footprint with close to 40% of revenues coming from Sweden, and Denmark number 2 with 24%, and then roughly 20% each from Finland and Norway. If you look at the middle graph, that's the customer growth per country, and as I said, we have a tremendous growth outside of Sweden and a stable growth also in Sweden. But we also see in the graph to the right that we have higher margins overall outside of Sweden, and that's due to that's more cross-border trading in Finland, Norway, and Denmark compared to Sweden. So they trade more outside of their local exchange, and that has higher margins for us. So we're growing the most in the countries with highest margins. Go to next. This is just a summary per country in customer growth and savings capital growth, and as you see, it's good numbers all over. Short comment on Sweden, even though the growth rate is a little bit lower than the other countries, we see a doubling of the growth rate in Q1 2021 compared to 2020. And then again, fantastic growth in customers and savings capitals in Norway, 65% customer growth, in Denmark close to 90% customer growth year on year, and also very strong in Finland with 33%. And we have a clear number 1 position in Norway, Denmark, and Finland, and a strong number 2 position in Sweden. Go to next. This is showing the development in our different revenue streams, where the red one is net interest income, the dark blue is non-transaction related income, mainly income from funds, and the light blue is transaction related income, mainly brokerage. And as you see over the years here, we have a good growth in all the revenue streams, but then an extra boost in the brokerage income. And that's due to what you see on the graph down right there with the margins. But we have a stable margin on net interest income. It's just affected on the treasury, but underlying very stable. Also very stable margin on the fund business. But we see a big increase in the brokerage margin from higher activity in the customer base. And 2 graphs showing that as well. We can go to next, Sunny. So in the graph to the left, you see here that we have a big increase in number of trading customers, and that comes of course from the high customer growth, but also that larger share of our customer base is not trading with shares. It's currently around 45% compared to historically around 30%. And then we also see an increased share of cross-border trading. So we're currently around 35%, where we historically have been around 20%. And it is 2 reasons for this. One is a general increased interest in the foreign shares, and also a will and a wish to diversify a little bit for our customers, which is good. But then it's also due to the country mix. Like I said, in Finland, Norway, and Denmark, it is a higher share of cross-border trading because their local exchanges are fairly small. Go to next. And the strong position we have in customer experience, as you know, we measure that through Net Promoter Score. That allows us also to take market share in the different countries. And here we show the market share in trades on the local exchanges. We've increased our market share in all markets year on year. Go to next, Annie. There's a few slides on the product and feature side. So we now successfully launched the Norwegian own pension account product in the beginning of the year. And it's been successful. Of customers that have done an active choice, we've taken 25% market share of those. And we currently have around 9,000 customers that have chosen to have their pension with us in the EPK shell. And also we see good transfer also on net savings from that customer base. Go to next. We also improved our fund instrument pages on our web and on our app. So we have more information about funds in general, but also a lot easier to navigate compared to before. And this has been well received by their customers and also increased the buy of funds from this release. We can go to next. We also launched buy sell dots in our chart, so you as a customer can see when you bought an instrument or sold an instrument. And this has been very, very appreciated by customers, and also a feature that many have asked for previously. And now it's here. We also focused a lot on availability and stability in our systems. And as you know, in Q1 we had a number of record trading days. And in spite of that, our systems has performed very well, and we have 99.9% availability through the quarter. While we know that some platforms, especially in the US and UK, have had tremendous problems during Q1. So that was a short introduction, and I hand over to you, Lennart, for covering more of the financial performance in detail.
Thank you very much. We can go to the next slide, Sonny. And as you all know and are aware of, I mean, we're two main key value drivers, and that is the customers and the savings capital. And as Lars-Åke already presented to you, I mean, we had a year-on-year growth by 40%, and on the customer side, and on the savings capital, an 8% growth. So we now have 1.4 million customers and 650 billion in savings capital about. So it's been a very, very strong year, but also a very strong quarter, as you see and you saw before here, with 167 new customers just in this quarter. We can go to the next slide. This has also resulted, as you can imagine, with the new customer base, with this uplift in new customers and the customer growth. We have a step from 19 to 20, and now we're into 21. Always a step up. 1.5 billion in revenue in 19, 2.7 in 20, and now on a rolling 12 months, 3.1 billion. We can also say that this comes from all the three major revenue streams. There's a growth not just in brokerage or net transaction related income, it's from all sides. But it's also very important to see that it's all across Nordic, with all 4 countries that are actually growing and are now the revenue comes in more and more diversified from all countries, giving a strength also that we're not just depending on Sweden or Denmark. We now have it in all countries for all the revenue streams. We can go to the next one. One important thing for us is, of course, to have scalability. And even though this tremendous growth that we have had since 19 and up to now, and the exceptional one in Q1, we have been able to keep the costs still. And yes, we do intend it, even though we had a slight uptick here in Q1, and we have a pressure on, as I said, customer services. But that I think you should expect when having this extremely high organic growth of new customers. It takes time to onboard them all. But as I say, we have been able to keep them quite stable for now 3 years. So yes, we can go further on. And this resulting, of course, in high revenue with flat costs, with a very nice growth in adjusted profit before tax, giving us this quarterly result and on record heights of 830 million. It's really amazing to see that. We can go to the next slide. We have also not just have had a growth in customers and savings capital and activity, but also on the lending side, where we have grown the lending portfolio from 15 billion to 22 billion this year. And as we have pointed out before, it is the margin lending product that we want to grow the most, and that we do as well. We also do grow the mortgage, but not at the pace as the margin lending, of course. And then we keep the unsecured stable on a nominal level, giving us a very, very nice credit portfolio with a low risk, utilizing the capital and liquidity as we can. The credit losses are very low. I mean, the accounted losses are even lower than they are. We're having credit losses in the same pace as we have had before. The low number of 4 million for the first quarter is actually resolving reserves that comes from the modeling of IFRS 9 due to lower unemployment rates. And that is also the same reasons that we had an increase in Q1 2020 to 18 million. So it's really the underlying credit losses are the same as 2020, as 2019 and forward. So we have no change in those. And it is only the unsecured part that is giving the losses. The margin lending here is actually a reserve increase due to the heavy uplift in the volume of it. Also due to IFRS 9, not recorded any losses there. So this quarter either. You can go to the next slide. Regarding capital position, we have a very nice capital adequacy with 21.7, so no restriction. And also the leverage ratio is on a stable level of 4.0. And that is in spite of that we have quite a lot of new deposits, which is the one that grows the balance sheet, but also decrease or affect the leverage ratio the most. We can take next one. Lars-Åke, may I hand over to you or?
Yeah, so I'm just going to conclude with the performance versus midterm financial targets and a little bit our key focus areas going forward. But looking at then where we are versus the midterm targets, on the FS side, we have still a clear number 1 position in Finland, Norway, and Denmark, and a strong number 2 position in Sweden. Customer growth, I mean, as you see, it's 39%, which is considerably higher than the guidance of 10 to 15%. Average savings capital is above, slightly above the guidance of 409,000 per customer, in spite of this high customer growth. Because I mean, that means that we have a tremendous growth in savings capital for existing customers, since the new customers that come in dilute this number a bit. But we also see that new customers bring in a lot of new savings capital from other banks and pension companies pretty fast. The margin, revenue margin, is also considerably higher than the guidance. It's come to 64 bips versus guidance slightly above 40. And as you saw on the revenue breakdown, it mainly comes then from the increase in a margin for trading from cross-border and also higher trading activity in general in the base. And rolling 12 months cost is also in line with the guidance. And dividend we have covered before, and then we follow the SFSA guidance for dividend this year, 25% of the profit after tax in 19 and 20. We can go to the next, Sonny. And our key focus areas, starting of course with the customers and having really satisfied and happy customers. And to have that, we continue to build then our best platform for savings and investments. That's what we do every day. and we want to continue to be number one in NPS, and of course to see from this a double-digit customer growth and also high retention in our base. But we also know we can never have happy customers unless we have happy employees. So we also measure employee satisfaction and work very actively on that. And we want to see here a continued upward trends. It's very strong development currently. And also that we have the possibility to attract and retain top talent, because that's key, especially not the least in product and tech. And then governance is of course extremely important. We are in a trust business and we need to earn that trust every day. So we need to have good ordning och reda, and that means that we need to manage our compliance and other risks in a good way, and that we overall are a trusted and liked brand, which we are today. And then profitable growth, and continue to leverage on the great growth potential we have in our Nordic footprint. We currently only have around 5% market share of the addressable market, so hopefully many years of growth ahead of us. And then this very strong focus we have on scalability, also to maintain a stable cost level going forward. So with that, we conclude the actual presentation, and we can move into Q&A.
Yes, we will. Thanks a lot, guys. And like I said before, if you have a question, you just raise your hand digitally, and I will enable you to speak. And you do that by push the button, raise hand at the bottom of the screen, and I will announce you by name. And then you also need to accept to be unmuted. It will show up a request on your screen. And I will go through all the people one by one that have raised their hand. And of course, it's nice if you just briefly introduce yourself before you ask your question. And first question today comes from Patrik Brattelius. Hello, Patrik.
Hello. Do you hear me?
Yes, we do.
Yeah.
Please go ahead.
Hi, I'm Patrik Brattelius from ABG. A few questions from my side. To start off, I would like to, you highlighted in the CEO wording that the large influx of customers is leading to cost pressure, mainly on customer service and back office. If you were to continue to see this large inflow of customers, would that lead you to need to change your cost guidance or revise it? Or is it just a temporary and you are still convinced that you will be able to keep the cost guidance that you currently have for the future?
So as you stated, I mean, the great inflow is put pressure on customer service and operations. We are automated to a large extent, but we do have manual processes, for example, of onboarding of some customer categories like minors, and the moving of securities from one bank to another, which is of course a lot of new customers are doing. And in general, new customers have more questions overall. So that's puts a pressure then on cost in customer service and in back office. And as you know, we have a growth rate of 40% compared to the midterm guidance of 10 to 15%. So I would say the cost level for 2021 will depend on customer growth now in the coming quarters. But I can also be clear, we will not sub-optimize the business and limit customer growth to at any cost meet the flat target. So I think the coming quarters are quite telling regarding the development.
So would that lead to you could temporarily increase cost, but you would still expect that cost will come down the coming years, given that less dependence on IT consultants and rolling off old IT systems, or would that be the new cost base, so to speak?
I think the main driver for efficiency is actually automation, and we work both with a lot of small automation initiatives, but also a number of larger automation initiatives that will take longer time. But as you know, we for example released a fully digitized customer journey for mortgage, and also improved and digitized the pension functionality. So we will work very actively with that going forward. So of course, ambition is to maintain a stable development going forward.
And as you highlighted on a slide, the FX revenue was very high in comparison to, for example, total income this quarter. Have you already now in Q2, are we expecting to see a normalization where we are going back to the level we have seen, let's say, during 2020? Is that a more fair assumption the coming quarter?
It's a little bit too early to tell, and we will include also the share of cross-border trading in our monthly reports, so we'll be able to follow this on a monthly basis also going forward. But we have two effects here that I talked about. One is, of course, the general interest of trading cross-border, and it was exceptionally high in Q1, not least due to a lot of trading in the US. But the other effect we have is this country mix, where we have fundamentally higher cross-border trading in Finland, Denmark, and Norway compared to Sweden. So even if perhaps the interest in cross-border trading is decreasing a bit, we also have this fundamental effect from the country mix that gives perhaps a different development.
Thank you. And the last question, keeping on the topic, have you received any criticism on the absolute level from clients, and do you foresee any price pressure on this line the coming years?
Yeah, I think we have 25 bips. We're very transparent about that cost, and we also show it when you do a trade. And in general, that's not a very high level compared to what you see on similar platforms, but also in other automatic changes that's done, then it's pretty cheap. And also, if you're really trading a lot, you can also open a currency account on the side, but then you need to do the exchange manually, instead of that we handle it for you.
Okay, thank you. No further question on my part.
Thanks a lot, Patrick. And next one up is Nicholas McBeath. Hello, Nicholas. We cannot hear you, Nicholas. Nicholas, I think you have to accept.
Yes, hello, can you hear me?
Yes, we can. Please go ahead, Nicholas.
Perfect. Good morning, it's Nicholas here from DNB. Yeah, one question to start with on the revenue margin, 64 basis points here in Q1, and you stick to your guidance of revenue margin slightly above 40 bips. So I was just wondering how you think about that. Do you expect kind of customer activity and or the share of cross-border transaction to come down, or is it more that you anticipate some kind of price pressure that's going to drive down that revenue margin, or maybe a combination of both? Or how do you think about that? Why should the revenue margin come down so much from the current level?
That's a good question, but as you know, also those targets are mid-term, and we're currently a lot higher than that. And we also want to see the development now a little bit going forward. I think Q2 is going to be interesting, but again, we see. And will that mean that we will have a higher normal, especially from slightly higher activity that more customers trade, but also then in general from the country mix, a higher share of cross-border trading. So that of course we follow, but I think we want to see a little bit more quarters before we look at actual guidance per se.
Okay, and then. Yeah, can you say anything about the customer activity development so far in the second quarter? Now we're almost 1 month into the quarter.
I think we see a strong development also going into Q2.
Okay, is it like similar level as towards the end of Q1? And could you be perhaps more explicit on the share of?
I can't be more specific than that.
Okay, and then final question. You got this remark and the investigation from the FSA related to your governance and processes connected to short sellings. Do you see any risk that you need to invest more into your governance here on the back of these remarks?
Yeah, so we see a need to improve the IT systems to manage every single case when it comes to intraday short trading that we already announced. And until that is in place, we also limited the short trading, the intraday short trading that you can do. But we're currently working on that solution, and hopefully we can come out with that in not too distant future. It's not a very costly thing, and we can do it pretty fast.
Okay, thanks. That's all from me.
Thanks.
Thanks a lot, Nicholas. So next one up is Mr. Gurjit Kambo. Hello there, Gurjit. Are you with us? From JP Morgan, I think. Gurjit, hello. We can't hear you. No. Gurjit, I'll come back to you later. And in the meantime, we'll have Mats Liljedahl. Hello, Mats. Can you hear me? You have to accept my unmute request, Mats, on the screen. Yes. Mats? Mats, no, can't hear Mats. So let's go to Julia Varesco. Are you with us, Julia?
Yes, hello, can you hear me?
Yes, we can, Julia. Well. Please go ahead.
Could you comment on the competitive landscape? That's the first question. How do you see that evolving? Maybe what are the risks of someone like Avanza entering the rest of the Nordic market now that their penetration in their local market is quite high? Also, could you talk about what is the progress on the EPK in Norway, and what are the average balances for the customers which you're bringing on through that program?
Yeah, I think the competitive landscape, we don't see any major changes that compared to before. Avanza moving into other markets, that's of course you need to ask them, but we also know, as we stated before, it takes a long time also to build up a position in a new country. We spent almost 50 years before we reached profitable growth, and now we of course can leverage on that investment. In Sweden we see a few players on the fund arena which are more aggressive, but otherwise I wouldn't say no major changes in the competitive landscape. When it comes to the EPK, so far, like I said on the slide, the customers that have done an active choice, we've taken 25% of their share, and currently 9,000 customers have signed up, which is far above our expectations, since we also know that the pension market is a little bit slow moving, but we got a very good start. And so far, 1.7 billion SEK has been moved from other platforms to our platform from that customer base, but is more to come in May when the majority of the transfers will happen.
Thank you. And could I just add another question?
Sure, go ahead.
Please.
The growth in cross-border trading, is that driven also by the demographic of the customers? So is it just because the customers are younger, they're keener to trade cross-border? So in that respect, we would probably expect this to continue?
With two effects, like I said, on cross-border. One is the country mix, where we have a generally higher cross-border trading in Finland, Denmark, and Norway, where we have higher growth compared to Sweden, because the local exchange is fairly small, so they trade a lot in Stockholm and in the US as well. On top of that, I think it might be, I mean, is a general interest in all the countries to trade more cross-border, and if that's sustainable or not, that's of course a good question. But I think the customers also realize that it's easy to trade outside of your home market, and also want to diversify a little bit more outside of your home market. So let's see how that's going to play out.
Thank you. So these were questions from my colleague Gurjit. I think there was a problem with the sound on the line.
Problem.
All right, good.
Thank you.
Thanks a lot, Julia. So we'll see if we have Ermin Kerik. Hello there, Ermin. Can you hear me?
Hi, do you hear me?
Yes, we do.
Yes.
Please go ahead, Ermin.
Do you hear me?
Yes, we do.
We can hear you.
Okay, I've lost you instead.
Strange.
Oh, that's strange.
Hello?
Hello, Ermin. We can hear you. Okay, that's strange. Oh, Ermin. We can't hear us, obviously. And Mats Liljedahl, are you with Mats? Can you hear us? No.
You can also post questions, I think, on the chat, can't you?
Yeah, you can do that. So if you have a question, you can also write it and send it in by using the chat functionality at the bottom of the screen. So instead of asking questions verbally, you can do it in the chat if you want to. So we'll give that a couple of seconds. Okay. I don't think we have any questions in the chat now. So, and we have answered all questions that we've been receiving. If that's it, then I think we can say before we close that the next thing that happened when it comes to financial reporting at Nordnet is that we publish our monthly statistics for April next week on Tuesday, the 4th of May. And like Lars-Åke said, we will also include the proportion of cross-border trading. Until then, thanks a lot for joining in today and for interest in Nordnet. Bye-bye.